Hey guys, Mark Flockhart with another insurance tip. Today I want to talk about how insurance works. So it's pretty basic. This is going to be a short video. The insurance company, you purchase a vehicle or you purchase a home, something where you have to worry about people suing you. So you want to protect yourself in case you cause an accident, some sort of liability that you could be sued for or you could be responsible for. That's what insurance is. So the way it works is you insure yourself or you protect yourself against three different things. With auto insurance, it's liability. So anything you're liable if you hurt someone or damage them, or anything that you yourself are responsible for. You caused an accident or you caused the occurrence. Then there's property damage. If you damage their house, their car, the shed in the side, you scrape it or you hit the mailbox, that's their property. That's called property damage. And then there is another part which is medical. That covers yourself. So if you get hurt because you caused an accident or something happened or just someone hit you and took off, right? Those are the three parts to insurance. The way that works is you purchase from a company, State Farm, Allstate, Progressive, Geico, all those guys, right? You call them up and you purchase the insurance to cover what you feel you want to be protected for. Now, yes, with auto insurance, and if you have a loan on a house, then that type of insurance is forced onto you because you can't afford the house or the car. They want to protect their assets, so they're going to make you purchase a specific coverage for that insurance. Auto insurance, because all of us drive, most of us drive in the world, or if you're watching Tubi, you probably drive. Unless you got in trouble, then you can't drive. Otherwise, watch my other videos on, getting suspended licenses and lapses and stuff like that. But anyways, the point of that is when you have insurance, you are technically forced with auto and home if you have a loan on the house. If you don't have a loan on the house, you're going to be crazy to not to have the insurance. But yeah, if you've got millions of dollars and you have a $100,000 house, sure, why not take that risk, right? The problem is you aren't just insuring the physical item. You're not just insuring the physical car or the physical house. You're insuring the liability. That's the most important part of it. Insurance companies aren't so focused on the car and the house and the items that you're insuring because they know what the value is. They can determine if you're that 10% that's going to have an accident and your car is worth $20,000, you're most likely to have a $5,000 claim within the next 20 years, right? They can determine that and have you pay accordingly so that they make a little bit of money on top of it. So your biggest thing with insurance is you're insuring your liability, the risk. If I hurt you, if I damage you, if I do something wrong and it somehow comes back to me and it's my fault, then I'm going to purchase an insurance policy that will protect me so that when you come at me, you're going to go this way at your insurance company, not at me. It's going to protect my assets, my income, my livelihood, okay, so that I can still retire and I'm protecting myself. That's the point of insurance. Now, keep in mind, insurance companies are not governized. They're not. Let me back up when I say that. They're governized as far as like the rules and restrictions, but they're still a company. Their job is to make money. If you want to learn how insurance companies make money, there's a video there. But their job is to make as much money as they can, within reason. Now, that's very limited because there's State Farm, Allstate, Geico, Progressive, Direct, General, LA Insurance, hundreds. And there are hundreds of insurance companies. You might think of 5 right now, but if you really sat down and looked at all the insurance companies, there's tons of them. And then you have your agencies and your agents and your exclusive agents and your direct models. There's tons of different types of insurance. And the thing is, there's so much competition that the value or the prices that they're trying to make are very low. So they got to be very strict. That's why when you sit down and call insurance, you're calling 3, 4, 5 different companies because these companies are fighting for your business, but other companies don't want it. You don't fit their guidelines? Sure, we'll do it, but we're going to charge you 3 times as much. That's why if you're in Michigan, you call up a company, they might be 3, 4, 5, 10 times as much. I've heard it. I've seen it. I've done it. I've quoted it. I gave a guy in Detroit a $10,000 quote, and it's crazy. You just cringe. It's, $4,000 a month. It's like, what? It's just the way they want it. You don't fit the guidelines, they'll still insure you, but because that higher risk for them, they're going to make you pay that much more. Essentially, the goal of insurance, the point of it is the insurance company is trying to have you pay just a little bit more than the risk that you're taking. So they're betting or gambling, so to speak, that you won't have a claim. And if they do, they're going to assume that you're that person that fits in, let's say, that 10-year period where the average 25-year-old has no tickets, no suspensions, no anything. Within that 12-year period, they're going to have one accident. It's going to cost about $3,000 in average. They know that. So they can accordingly bid the cost of your insurance based on that. Now, when you have that accident, here's where a lot of people don't like insurance. You've changed the risk that you're in. You've gone from here, which is a lower risk, and brought yourself up to here because boom, it hit. Now we know you're 29 years old, right? And the average 29-year-old that has had one accident is likely going to have, within the next 12 years, 2 more accidents. I'm not saying that's what it is, that's just an example. So now they're going to raise your insurance based on that. They're not just doing it just to hit you because it's all numbers. They're just playing the numbers game. It's like sitting down at the casino and playing roulette, right? You know that if the ball rolls on that, you got a chance of getting that. It's just the way it is. That's the primary way insurance works. If you're new to insurance and you just want to learn the basics of it, got another video up here. It's Insurance 101. That'll walk you through the different coverages, what you should select, what income levels you need to be, and all that. If you want to know more, I'm starting to play with a little bit of a website. It's called insurhints.com. Feel free to visit that. But leave me a comment below. What are your thoughts? How do you think insurance company works? How do you think your specific agent or company is treating you? Let me know also if you have any questions or any advice on different insurance videos you'd like to see, and you could be responsible for the next one. Till then, I will see you in the next one.